I'm speaking this morning with Sandee Watson, Senior Associate Broker at Hall & Company, an insurance firm that serves engineers and architects with professional liability insurance, otherwise known as errors and omissions. Good morning, Sandee. How are you?
I'm good, thanks. How are you?
I'm fantastic. Sandee, if you could help me out a little bit, I want to understand a little bit about excess and surplus lines insurance.
All right. Excess and surplus lines insurance companies are also referred to sometimes as non-admitted insurance companies, and they're different in the way that they operate with state insurance agencies. But in terms of the way that the policies with non-admitted insurance companies will function for the insured, it's just like any other insurance, and it will respond to claims in the same way. The main difference is that excess and surplus lines insurance companies don't file their rates and policies for approval with state insurance commissioners. Also, excess and surplus lines insurance companies don't participate in state guarantee funds, and they pay an additional state tax for the right to do business on a non-admitted basis.
Okay.
Excess and surplus lines insurance companies are regulated within their own jurisdictions and monitored by each state. For example, Lloyd's of London operates as excess and surplus lines insurance companies. With Lloyd's, there's a central fund which all Lloyd's syndicates pay into that's intended to pay claims in the event of insolvency, similar to what state guarantee fund would do.
Okay, now if I am a customer or if I'm a business, why would I want to consider a surplus lines company for my insurance?
Well, there are a lot of advantages to working with excess and surplus lines insurance companies. Since they're not restricted to using filed and approved rates, they're able to be more flexible in their pricing, and they can evaluate a firm on its individual merit rather than relying solely on how that particular business class has performed in the past. The classic idea of surplus lines covering unconventional or harder to place types of firms is also true. They'll often offer coverages that admitted markets can't or won't. So it's definitely worth considering an excess and surplus lines insurance company because the underwriters have greater leeway and sometimes more risk tolerance. So you can often get more competitive pricing and broader coverage as a result.
Okay, and that makes sense because there are going to be certain companies who are a little bit at a higher risk, and the surplus lines insurance companies obviously can cater to those folks. Why do you think that some agents tend to avoid surplus lines markets?
Well, first of all, you have to have a special license in order to sell excess and surplus lines policy, and it's pretty difficult to attain. We've actually had that license for about 20 years, so we're really familiar with this marketplace. Aside from the licensing issue, a lot of agents steer their clients away from surplus lines markets simply because they don't really understand what it is or how to access excess and surplus lines insurance companies. Also, they might want to avoid the extra work that it takes to file the policies and the taxes. It's really unfortunate because it promotes unfounded concerns about excess and surplus lines companies when in fact there's no reason for an insured to view a non-admitted company any differently from another insurance company.
So it sounds like the industry has perpetuated some myths about surplus lines companies that you've just dispelled during this video. So I appreciate the fact that you shared with us a little bit about excess and surplus lines and how customers might be able to take advantage of that. Thank you very much, and I do look forward to speaking with you again.
All right, thank you.